Okay, everybody. How is it going? Can you hear me well? Can you hear me fine? Can you hear me well? I want to confirm that I'm all well heard. I'm all well seen. Okay, there seems to be 65 people waiting, which is very good. Please let me know in the chats. Okay, so that you can confirm. Beautiful, all good. And listen, today we are going to cover a beautiful workshop, beautiful masterclass that is going to basically tell you everything you have to know about. Well, this is the old one. Uh, this is this very one. If you remember the breakout trading, then you're going to love also this one. Putting all together, Confluence Trading Masterclass. This is what we are going to discuss, everybody, for the next 45 minutes. Okay, we'll try to make it in under 45 minutes, because there's right after there is a main final grand closing for our 14-day free trading congress that all you guys have to be there and join to watch live our amazing congress summary. So not to take it any longer, let me play very quick the credits for our partners. Okay, and we are going to go there right in a moment.
PrimeXPT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on PrimeXPT in minutes.
YFDI is democratizing finance by creating the most secure, transparent, and user-friendly ecosystem of DeFi products. To learn more, visit thebirbnest.com/YFDI. Bistro is a decentralized peer-to-peer food marketplace that makes ordering food more convenient and rewarding for both providers and customers. Learn more at thebirbnest.com/bistro. Equinix is a NASDAQ-listed digital assets company offering crypto exchange, custody, asset management, borrowing and lending services, and more. Enhance your crypto wealth today at thebirbnest.com/Equinix. The Change DeFi app allows you to become your own digital bank with automated financial services that give you complete control over your wealth while enjoying 100% freedom and security. Sign up today at thebirbnest.com/change. Join over 10 million users trading on Crypto.com, the world's fastest and most secure crypto trading platform. Earn up to $50 of CRO with the code CryptoBirb when staking at thebirbnest.com/cryptocom. Lease Capital is the first launchpad on Arbitrum. Get access to early investments in the most promising projects at thebirbnest.com/leasecapital. Eureka helps creators protect, manage, and monetize their work with the power of blockchain. Secure your rights and your revenue at thebirbnest.com/Eureka.
Beautiful, everybody. I hope you guys are doing okay. We are definitely wanting everybody to, to make sure you are going to get as much value as possible throughout this entire Congress. That is what we tried our best. This is also what I'm going to do my best to get you guys for the best knowledge, for the best summary, for the best wrap up over the past 2 weeks of pure knowledge. Everybody, this is my very aim, to provide you with the proper workshop and masterclass about trading Confluence, about the most important aspects that you have to be aware of while making your decisions, while making your trading moves. Okay, and if you guys are ready, let's get and smash it. Okay, there is going to be a presentation, and then later I'm going to cover a 5-10 minute Q&A with you before we hop on another final closing show. Everybody, let's get it going. Let's get it going. This is putting all together Confluence Trading Masterclass. Okay. And for the trading masterclass for Confluence trading, you have to understand first what trading is. And trading, of course, well, we have to explain and make sure we are on the same page for the very foundational and fundamental aspects of trading. Trading is a process. Trading is a process. Trading is an event. Okay, it's a process, it's a continuous process of exchanging between the buyer and a seller. This is a trade. Making a trade, the trader is somebody who makes a trade, right? Somebody who flips the goods for other goods, be it commodities, currencies, or some other values. Every day you go to a shop, you make a trade, money for resources, money for vegetables, and so on and so forth, right? And that said, again, you may think I'm explaining something obvious. To me, it's obvious, yes. But I promise to you that if you ask 95% of people in the streets, then they're not going to be able to answer you well what that is. And because of that, again, we have to understand that trading principles, one of the main trading principles is that this is the game theory. And the game theory means basically that we are talking about some certain environment included, right? A trade as a deal is an institution from the economic point of view, because it takes certain agreement, it takes certain system, it takes certain environment in which that happens. It can be physical, just like floor trading, exchange trading. It can be also virtual, just the one that we are doing with the digital currencies, with cryptocurrencies. Okay. And that said, again, game theory means that there is a buyer and a seller, and they exchange the goods, the values. And there is going to be always one winner and always one loser to this game. For one person to win, there needs to be somebody else to lose. And for other person to lose, there needs to be somebody else to win. This is no like a case that capital just evaporates out of the market and it doesn't find its owner. It just flows between different hands, between the weak hands and between the strong hands, between the people who know what they're doing with their money and who don't know what they're doing with your money. And 90% of people or more on statistical basis don't know what to do with their money. Okay. So to be able to answer your trading, you have to understand your trading style. Of a trading style, we can differentiate a couple of different risk variations. And we are talking about aggressive style. We're talking about like more passive style, more neutral style, right? So basically, we can tell and differentiate between the high risk profile, okay, or um, or basically the lower neutral risk profile, right, or the low risk profile. Low risk profile. Okay, as simple as that. Your trading style is decided upon your risk aversion profile, whether you're a gambler or you're in risk neutral or you are, well, risk averse. Risk aversion, which means you try to mitigate and avoid any risks whatsoever, is a very, very, how to call that, precautionary. I don't know if this is the word, but you try to play it very safe. You, as a matter of fact, don't even participate in trades, although you could win them. Risk neutral means that risk neutrality means that if your trade setup is good, then you take it. If it's not good, then you don't take it. And high risk profile or gambling profile means that no matter the trade is good, no matter the deal makes any sense, you want to be in the game. No matter the cost, no matter what, no matter why, you want to be in the game. Okay. And you have to understand which part of trading style you belong to, whether it's a gambling profile or it's risk neutral profile or it's low risk profile, which is risk aversion. Okay. As simple as that, everybody. Then you have to go and understand about your trading strategy. Trading strategy basically gets you, as the most important point, about deciding what frequency of trades actually you want to get to lead you to fulfilling your goals. Every goal needs to meet certain criteria, needs to be SMART, right? SMART, which stands for specific, measurable, achievable, relevant, and time-bound. Any goal, any trading goal, any goal in your life needs to be defined at least by those 5 acronymic letters. Okay. Specific, measurable, achievable, relevant, and time bound. All these factors need to be completed before you make your trading decisions. And trading strategy is something that takes you there. Trading strategy is something that takes you from point A that you're in to point in future where you want to be. Okay. And how efficiently you're going to implement your strategy and perform your strategy, then this is going to take you to a place you want to be at or not, right? And trading strategy is a way of realizing that. So basically, it tells you what kind of frequency trading you want to get. If you want to be a day trader, right? If you want to be a day trader, which is day trading, which is swing trading, which is a bit more, for medium-term swings. Usually, you trade swings rather than intraday noise. Day trading means you make one trade a day. You wake up, you make a trade, close the day on the same day. Close the trade on the same day before you go to bed. This is what means day trading. Swing trading means you trade swings on the market. Like in day trading, you don't necessarily have the time to play swings, right? You play something that the market gives you on a certain day. In swing trading, you basically have to decide about what swings you play, whether you play longs, right, or shorts, and because you can play swings in both directions. You can also have and differentiate a position trading, which is something that I personally do and perform and prefer, right? Which is when you decide fundamentally, technically, based on the confluence of different indicators outside the TA as well, you make a decision to hold and open a position that you are going to hold for some time. It's not going to be quick flip. You decide to hold a position. For me, it usually takes 3 months, 5 months, okay? And on top of it, you have a buy and hold strategy. And this basically is what would do best for 90% of the people on average, right? Most of the people go for the day trading because this is the closest to the gambling. And when they go down the rabbit hole, they find themselves gambling with no rationale applied. This is why they lose, right? Buy and hold gives you basically very good returns, gives you average returns. It's very hard to beat the average. As simple as that. Trading techniques, we are going to basically analyze a couple of those based on different technical indicators. Every technical indicator can be used and served as your own trading technique. So trading technique, basically, everybody, means that you have your favorite trading chart setup. If you trade based on charts, you have a trading chart setup, just like it shows here. For example, volume weighted average prices, right? The orange curves, or just the price action, no indicators applied, and you trade based on the market making higher highs and on the breakouts or lower lows and so on, etc. Kindly refer back to breakout trading. I'm not going to repeat that. Or you trade based on momentum and so on and so forth, right? And trading system is an actual way how you make money, which means that you incorporate all of these factors into your trading system. So trading strategy is your main narrative, is your kind of like direction, is a focus, where you want to be and where you want it to get you. And trading system is a execution of it, is a realization, is a discipline, is a set of rules that you're going to follow. And you can have, for example, a trend system, right, where you follow and trade the trends. You can have a fade trend system where you actually trade momentum and you fade the trends, right? Just like you have in here, the market is not moving upwards, the market is not in uptrend, but you see a chance from the momentum that you see this bullish divergence that tells you about the fade opportunity, and you can fade the downwards trend, kind of like front run the sellers, and well, with higher risk and higher chances of failure, but with bigger profits, you can actually execute it. Trading system as well is a breakout system, right? So you trade breakouts based on the price action when it gets you a new market high, right? Or the volatility breakout. So breakouts refer back to my latest private workshop. Okay, those private workshops, they haven't gone anywhere outside public. They are not public. Okay, they are only available to the Congress participants, to the exclusive premium membership people. And kindly refer back to breakout trading. Everybody, please let me know very quick if it makes sense so far. If what I am saying just, kind of like tells you, answers some of the questions so far, right? I definitely want to embed and implement some sort of like a theory for you, okay, so that you have good understanding. Theory always comes first, okay? Let me know in the comments very quick. Okay, I have the chat open. I have a chat open, live chat open to track your questions. Beautiful. I can see you guys. You guys understand that and follow very well. Beautiful. And then technical analysis. When we talk about Confluence, you guys have to understand the Confluence, cross confirmation, alignment, like agreement. Those are almost synonyms, I would want to say, in trading. In the Confluence, it means it has to be confluent. It needs to have a common space, common spot, okay? Which means that different angles, different stories need to lead you and take you to the same place. And if that happens, this boosts your chances of winning. So we are talking on this workshop about the trading Confluence, about Confluence trading. So we are going to cover not only technical analysis, we're going to cover also fundamentals, on-chain, intermarket, and sentiment, and putting all together with the case study at the very end. Let's start off with the technical indicators. Basically, you can have 5 types of indicators. Trend indicators, which are basically telling you about the trends. If you watched my yesterday's video report, then you know what I was talking about, moving average 20 of Bollinger Bands, MA20. I was talking about like turning off the charts, price chart, and seeing actually only the trend. If you turn off the price chart, you see a trend. So trend per the moving averages, the momentum, RSI or the Birb Pro, right? Or stochastic RSI, stochastic oscillator. ROC, rate of change, momentum per se. There is an indicator that is called momentum, right? There is a group of indicators that is called momentum, a category, but there is also an indicator that is called momentum. And this basically is a difference between 2 different prices. We have a volume indicator, right? Volume indicators like volume spikes. We have volatility indicators just like Bollinger Bands or ATR, or which is average true range, or standard deviations, right? Or beta as well for stocks, where we compare the stock strength against the average, against some certain referential points, like Dow Jones Industrials or S&P 500, some base index. You have breadth indicators as well, and those apply only to stocks. You don't find it useful for crypto. For breadth, it basically is an advance and decline. Very simple stuff. When you compare the advancing stocks versus declining stocks. So you take, let's say, the exchange, NYCSE, like NYSE, right? New York Stocks Exchange, or CBOE, Chicago Boston Options Exchange. The Boston's Options Exchange. I mean, you have CME, you have Chicago Mercantile Exchange, Chicago Exchange for the futures for options as well, or any other exchange you take. So they have a basket of assets. They have a basket of instruments you can trade. And then you take those stocks that are traded upon a given exchange, and you compare how many of these stocks, how many of these stocks are going upwards versus how many of these stocks are going downwards. And you compare those. And when you have advanced decline, which is larger than 1, right? Then this tells you that more advances happen. The market is stronger. The market is getting stronger. So by picking a stock that is rising, you can actually just get you better chances for winning. Because if the advanced decline, the ratio is declining, and it's lower than 1, for example, nearly going close to 0, then being near to 0 means that there is like almost infinitely bigger amount of declines versus advances. That tells you basically that if you want to open a long on something that mainly declines, well, then you're in the loss position from the very start. By the way, this is not a public stream, right? So I appreciate the likes, I appreciate everything, but you don't need to bother with that right now. This is private, right? So this is not going public. And as I said, moving averages, very simple stuff. 200 moving average, 50 moving average. 50, it tells you about the 50-week average, 50-week price of Bitcoin. It tells you about the 200-week price of Bitcoin, average fair prices. RSI, just like I said, relative strength index, compares the upward updates and down days of the past usually 14 days. So it takes 14 days past. Well, this is basically 2 candles here, like on a daily basis, but 14 candles on the weeks in the past. It looks back in the past and compares the upward stays and downward stays. How many the percentage the point increases over the day and the declines, and it compares it to tell you about the relative strength. I'm not going to again disclose right now everything about RSI because that's not the main topic. Just opening your eyes about certain subjects. Volume spikes. You can know that every volume spike basically comes with a reversal, or the other way around. Every reversal needs to be coming with volume spike. Otherwise, it's not a reversal, right? Every spike in volume, a spike by definition needs to be like, if you have a regular volume bars, regular volume bars, then spike is 2 to 3 times larger than the previous one. So the previous one needs to be 2 to 3 times smaller, okay, than the spike. Then you can tell about the spikes. And every single spike in volume means reversal, right? This is where the market reverses. The biggest amount of liquidations, deals closed. This is where the market loses the previous trend's momentum and reverses. And this is exactly why I don't think we topped out anywhere here. We are missing that. Bollinger Bands, just like I said, I explained how it works yesterday in the video report. We're not going to waste time on that right now. I kindly refer back to everybody to go to my video report yesterday, 20 minutes straight. I was explaining how Bollinger Bands volatility indicator works, okay? 2 standard deviations on top, 2 standard deviations below the average, 20-day average as the median central point. Go ahead and check it out. Breadth is a typical, just like I said, advanced decline line, as I explained for the stocks. And because we have about 20 minutes, like as I said, 20-25 minutes at best, we have to make it compressed. About Confluence, we have to go outside. We have to go outside the TA. Fundamental analysis, for everybody's understanding, is a method of measuring value by examining related economic, which is micro and macro, on a personal basis, on a customer basis, consumer basis, and on the interest rates basis, the huge macroeconomic policies. Financial factors, which is the state of economy and industry conditions, or the effectiveness of companies' management. So this is the way of deriving the value, of arriving at certain value, different angle than technical analysis, not about the inside market, but about the outside market factors. Technical analysis tells you about what happens inside the market, tells you about the correlations and relationships between traders, buyers and sellers, between them, right? So technical analysis steps inside the trade, and fundamental analysis takes it as a whole. It doesn't investigate what's happening inside. It takes its correlation and its dependence upon the external factors, just like interest rates, just like other market strength, or like economic strength, quantitative waves, interest rates policies, just like I said, monetary policy, and so on. And also qualitative factors, just like companies management, like the staff, the team, quality of the product, quality of the works, efficiency, financial report statements, and etc. Right? And for the fundamental methods, again, we're not going to expand too much. Benchmarking, you can compare it to similar size companies, or have one as a benchmark. Have, for example, a Google as one of the largest tech stocks, and have it as a benchmark. You compare every other company, for example, Apple versus Google, Amazon versus Google, right? Alibaba versus Google, and compare that based on a benchmark. You can have discounted cash flows, DCF, where you assume that price of a share is a future value of discounted cash flows, right? Of free discounted cash flows. So you can have an accounting method where you compare the revenue and expenses, right? Very simple P&L, profit and loss account, income statements, and so on. Price to earnings, very simple indicators. Again, we're not going to cover too much. For Bitcoin, we are talking about the digital scarcity that is at the very source of fundamental value. Digital scarcity comes from deflationary tokenomics, or decreasing inflationary tokenomics. The inflation of Bitcoin decreases over the time, or if you will, deflation increases over the time which combined with halvings, which happen once every cycle, once every 3-4 years. Well, those halvings basically cut the block rewards in half. This is the way that it's programmed and the way that it derives the fundamental value of it. And stock to flow tells you about this is the model that Plan B uses. And stock to flow tells you about the rate of new bitcoins being added to the network relative to the existing supply. And of course, the later in the cycle, the later in the Bitcoin's history, the harder it is to mine them, because the fewer exist and the bigger computational power is needed to mine them, right? The more expensive it gets to mine them. So stock to flow builds this digital scarcity and model for price value in future based on the fundamental basis, right? This is the Plan B chart, just like I said. Sentiment analysis, everybody, right? Another factor, another angle. By the definition, we'll have to take away that this is analysis of the overall attitude, approach, consensus of opinions of the market. We're not talking about one person opinion, but about the opinion of the crowd. And the crowds tend to have very similar opinions. This is how herding effect works. And we have a different perception biases, which distort our reality, distort our perception, the way that we perceive and understand the reality, what happens. This is the exact reason why seeing the same price chart, one person is going to tell you it's a beautiful long story, beautiful long opportunity, and the other person, based on the same chart, in no indicators, they're going to tell you it's a beautiful short position, right? So this perception bias usually comes under the saliency, comes out of the framing. Saliency is when you don't expect a trend to change just because it hasn't changed recently. When you don't expect a flood to appear just because the flood hasn't appeared in your area for the past 5 years, right? Just that you don't expect a hurricane to come through your house just because it, didn't arrive there in the past few years. But it doesn't mean it will never arrive. So that's the point. And when it arrives, it's usually too late. Right? Framing, it's about the way you phrase it, the way you read it, the way the media manipulates as well. The question is whether you want to take a ticket, take a bet for 30% chances of winning, right? Or the same phrase, whether or not you want to have a bet where you have 70% chances of losing. So it activates completely different areas in your brain, one for the fear and one for the greed. Okay, and this distorts your perception. Anchoring, whenever you rely too much on somebody else's opinion. Let's say I give you a number, 5,000 out of nowhere, and if I ask you if 5,001 is a lot, then you're going to likely say yes, right? Because you can compare that with what I said, with my anchor. I threw an anchor, and you relate to it. You actually refer to it. This is your only reference point, and it should not be this way, because what if this 5,000 is in the comparison with 5,000 million, for an example? And apparently 5,001 is not really a big number, right? So this is about the context. Sunk cost biased. When you buy the ticket for the cinema, where you go for the ticket for the cinema, but in the meantime you decide, fuck this cinema, I hate this movie, I don't want to even go there. But you spend money on that, so you decide to go there because this money otherwise goes to waste. So you act irrationally. You don't want to even go there, but you're going there just because you wasted your money on that. You spend your money on that. This is sunk cost bias. The assumption is, which you're very well aware of, is that crowds are always right in the middle of trends, but they are always wrong at the extremes. And this is what happens, and this is why I use fear and greed index, right? Which tells you about, summary of volatility, momentum information, social media surveys, dominance and trends. This arrives with a result in here, okay? And fear and greed index tells you about how much people FOMO, how much they fear of missing out, and how much they fear with uncertainty and doubt, especially at the bottoms, right? And extreme emotions enhance perception biases. So the more extreme emotions that you feel, the more perception biases are going to work upon you. And that's exactly what media manipulation relies on. This is exactly what media uses to wash your brains. This is exactly what media builds, like how they build the emotional connection and make you an addict, a media addict, just like you were a drug addict. They attach you emotionally, right? They make you rely on their opinion. It's not even their opinion. They are just manipulating that, right? Bitcoin bottoms in 2018, December 25th, 2018. That was the floor of the depression, $4,000 Bitcoin. This is how it looked, right? Bitcoin died 90 times. Bitcoin's bad years keep getting worse. You'd be crazy to actually spend Bitcoin. The great Bitcoin scam. This is how it looks on the bottoms, right? And I also, when we're there to mention the on-chain indicators, right? And the on-chain indicators, we can actually get that perhaps from my other presentation. Let me find it. Let me find it very quick. And by the way, guys, throw in your questions. I'm going to try to answer them in like 5 minutes, very quick, before I need to go to another show, the All Hands, where everybody of my team who's currently available is going to jump on a stream and explain everything to you. Okay, let's very quick, guys, very quick. I hope this is. Let me find it very quick. Put your questions in the chats. Another point, on-chain analysis, right? On-chain analysis. Very quick. It is a fundamentals-driven approach, okay? And it usually includes information regarding all transactions that occur on a certain public blockchain network, which is sending, receiving addresses, transactions amount of fees, block timestamps, block rewards, mining rewards, miners fees, and so on and so forth. Right? You happen to often see me using in Bitcoin reports the active addresses, right? Which tell you about how much addresses are there that are being active, that are exchanging, that are working, right? You often see me use NUPL, which is net unrealized profit and loss, which I explained basically about 100 times. You can see the hash rate, which is the amount of computational power used in the network in the terahashes. Hash rate ribbons, and so on and so forth, right? Or market value to realized value ratio, MVRV, market value to realized value ratio, right? So you have many different on-chain indicators. We're not going to explain them right now, but giving you food for thought to open up your eyes for how we can use the confluence, okay, of many different angles, which if tell you the same story, then they become very powerful thing for you. An intermarket analysis of the last one, right? This is a method of analyzing markets by examining the correlations between different asset classes. Every market is correlated unless it's some sort of like isolated and there is like no trade deal or embargoes. But assuming there is a capital flow and there is a free market, then the markets are correlated. What happens on the stock market impacts on what happens with the Bitcoin market and the other way around, although the correlation is stronger from the stock side. What happens on the gold market is depending fully upon what happens on the dollar side, on strength of dollar, DXY, dollar relative basket index, right? And John Murphy, highly recommended. You go for it. Intermarket analysis, profiting from global market relationships. This is something I'm actually answering right now to Perla Skripariu about the resources. This is a resource for you. Okay, John Murphy. Go for John Murphy. And just like I said, markets are correlated. This is the price of gold, okay, and Dow Jones Industrials per the dollar index. Sorry, not the Dow Jones Industrials, the Dow Jones Dollar Index. So Dow Jones Dollar Index is the blue one, and gold is this one. So you can tell there is an inverse correlation, negative correlation, that the stronger the dollar gets, which is the blue line, the weaker the gold gets. Right? And Bitcoin is also negatively correlated with dollar, just like you see. Every peak that Bitcoin has aligns in tandem with bottom on the dollar. The moment that dollar strengthens, Bitcoin declines, right? Bitcoin bottoms, floors, dollar peaks. Dollar bottoms, Bitcoin peaks, and so on and so forth. Markets are correlated, everybody. As simple as that. As simple as that, okay? And knowing of that, let's go for a very quick final slide. So putting all together, right? This is the chart. This is the technical chart that I used for the call, for today's official call, everybody. Right? Where I used this very Confluence principle. This is actual case study. I really use that. And I've just applied that in the official calls, which out of the past 2 calls that I made on Bitcoin, both were bottom calls. I made one call on $30,000 and the other call at $40,000. Both appeared to be bottom calls, right? So similar way, I'm expecting this one to be a bottom call, unless, well, asteroid crashes into Earth or whatever unpredicted news happens. Right? So this is exactly what I'm using. And just like I said, I combine many different fields and angles to bring the confluence, to bring the cross confirmation between different asset fields, right? So we are talking, let me read. Bitcoin has been teasing everybody with local 20% retracement over the last few weeks, as mentioned in my Bitcoin reports yesterday, an exclusivity report. We are in great risk-reward setup to long Bitcoin with minimum risk. The favors speak for Bitcoin's bulls at current levels for several reasons. Technical ones, and not only. Low time frames, LTF, low time frame retracements usually offer max 20% declines. Check. Daily momentum is oversold. Confluence from different technical indicators. So inside TA in Confluence. Daily huge hidden bullish divergence since mid-September, sorry. 12-hour confirmed regular bullish divergence, which is different, but also confirmed. Trading around $55,000 support. Fear and Greed Index, sentiment analysis, confirms and backs up the idea that at the bottom, if it's not bottomed yet, then it's very near. 30 to 40 points, strong fear in the market. Sentiment has been trash. Seasonality of November, December, which usually gave in the history strong positive performance, about 60-70% upwards on average. There were the down months in the past, but most of the time it provides you with average 60 to 70% returns just in November, December period. So additional narrative. New all-time highs coming in the past, 67, 69,000. Okay, very recently, Bitcoin was showing technical strength. So this is TA side mixed with fundamentals, which are, of course, still confirming the stock to flow. Theoretical valuation based on the digital scarcity model is not yet near completed. Sentiment, on-chain analysis also, because the on-chain lagging behind the price, bullish divergence. So I was telling about NUPL being, despite prices trading higher than it did than it was in April and May, it's trading right now with an UPL which is way less overbought, which is way healthier, right? This is this thing. And just like I'm saying, all these things combined give you confluence and make you additionally arrive at levels and trade concept. That's everybody. How we do it. That's how we do it. That's how we do it. Let's get you through Q&A. Questions. I have about 4-5 minutes at best right now. We're going to cover all of them in the chats later to the show. Anastasia, no questions, Edmond, just an observation. You're very bright and good teacher. Thank you for so much compressed info here. I appreciate it, Anastasia. All the best. God bless. Regarding sentiment analysis, how is the data collected? Just like I said, just like I said, everybody, this was being put, well, here, right? Volatility, momentum. It's the technical indicators combination with how people feel about that, mainly social media, surveys, dominance check, and trends, right? This is a combination for fear and greed index. As simple as that. Uh, I don't really understand how the Barbicator works. Make sure you actually check the description on the TradingView. It's free. You can go ahead and check it, and it's all beautifully explained in there. I appreciate it. I love the academic quality info you give us. I appreciate it as well. I'm happy you love it. When are you coming to Kraków? Nie wiem. Nie wiem, Mortka, nie mam pojęcia. No idea. Just yet. Okay, I take two last questions. This is in Polish. Witam, czy nadal wychodzisz do grudnia? Czy trzymasz jakąś część portfela na dłużej, Adrianie? To translate it, Wrosu is asking if I'm actually just holding on to my plan and strategy to leave with most of the capital until December or until the year ends, or / until NUPL shows overbought, crosses 0.75, because this is the ultimate indicator for me, not the time. I cannot have a crystal ball. I don't have a crystal ball. I have no idea when it's going to top. But I know that when the NUPL crosses 0.75, this is where I don't want to be in the market. So I'm slowly realizing my profits. Slowly. It's not aggressive, but it's slow, but certain. It's sure. Slowly, but surely. So, doesn't matter if it's December, because I'm making deals in December, yes. I'm realizing my profits in December. I'm realizing my profits in November as well. I'm slowly moving the market, like my money out of the market, but it's not aggressive. I get aggressive and get the fuck out of the market with 80% of my capital, like the moment that NUPL crosses 0.75, right? So what does fear and greed tell us? Just like I said, the market is always right in the middle of trend, but always wrong at the extremes. The more extreme fear, the better buying opportunity, because the market is wrong. The more greed, the more extreme greed in the market, the wronger the bullish side is, and the later they join, usually, and it's better time to take profits. Do you have a favorite time during the day to check charts? I do my charting sessions. I have my charting sessions based on my availability, based on my priorities. For example, next 2 weeks are going to be all about the CMT3 preparations. So I'm not going to see too much in the charts. Na jakiej dźwigni otworzyłeś pozycję przy poziomie 2,96? So the leverage I opened the longs at 29.6 was 3x. I don't trade much leverage. I don't need much leverage. My capital is leverage itself. What is your opinion on the leverage being so high at the moment? Market can stay irrational longer than you can remain solvent. If you try to counter trade the trends, then the market is going to prove you wrong, and you're going to wipe it out. I trade mainly, like what you're talking about is like a short-term noise. This can cause, as I said, like $53,000, $54,000 decline still. Who cares? I don't know. This is just a short-term deviation of something that is coming, and I'm talking about $100,000 plus targets, right? Everybody, we've come to an end. I want to invite you to take part in another session, which we are having on our YouTube open. This is the grand closing of our Congress. I want you guys to be there. But most importantly, I want to show you something very quick. Very quick before I disconnect. More questions, guys, I answer in the chats. So make sure you actually go ahead for the Discord. Black Friday deal. just that. It's getting open today after the final show, which is in about an hour. We're going to be able to get insane discounts. Insane discounts. If you've joined the Congress, this one is for you. That's all I say. Make sure, guys, you participate on the final show on the Congress, which starts in about 12 minutes. God bless you all. Hope you enjoyed. Stay safe and see you on the next show.